birthday to the bull market. Today marks 8 years for the S&P 500 remaining in a bull market. But after the spectacular Trump rally, is it time to maybe cash in a little and wait for a pullback? Joining me now is Tony Robbins, Unshakeable author, which just became yesterday #1 on New York Times, right?
Yes, it did.
Congratulations.
Thank you so much.
This is a little unusual for you to do this kind of a book. You're more into, self-improvement and so forth. Why this book now?
Well, in 2008, when I saw people losing half their net worth and losing their homes, I grew up dirt poor, so it wasn't a statistic for me. And I've coached Paul Tudor Jones now for 24 years. He hasn't lost money in those 24 years, so I've learned a lot from him. So I thought if I could interview 50 of the smartest people in the world, the Carl Icahns, the Warren Buffetts, the David Swenson, all those
Don't forget Jack Bogle,
and
who's
Jack
right on
Bogle.
the cover of the book. I want to talk about Jack in a minute, but first, 3 groups of people: 30-year-olds, 50-year-olds, and 70-year-olds. They all have different scenarios.
Yes.
I would think that the 30-year-olds would be the easiest to advise. Just put your money 100% in stocks, leave it there, don't look at it, put it in an index fund. Am I right on that?
That's one of the best things you can do. But although I still believe there's diversification, right? You still don't want to put everything in any asset class.
Well, there's some Vanguard funds, for example, that diversify. Okay, 50-year-olds. That's right in the middle there.
Yes.
What would you advise them to do?
Well, here's what I believe. I wrote this book because we know that we've got the birthday today, so we know this is the second largest bull market in history. The longest is 9.5 years. Somewhere in the next 6, 12, 18, 36 months, no one knows. Warren Buffett will tell you, nobody knows when it's going to adjust. And what most people are saying, well, this thing's going to run out of steam. I wanted to show people that A, how to protect themselves because it's coming, but B, how to take advantage, because whether you're 30 or 50, when the market crashes, it's counterintuitive, but everyone can show you that's your chance to leapfrog from where you are to where you want to be. And so my partner in this is Peter Mallouk. He's from Creative Planning. You guy, well, CNBC, not you guys, excuse me.
The bad guy. We call him the evil empire. But go ahead.
I'll give you a sense. Barron's he's the only man ever nominated as the #1 wealth manager in the United States 3 years ago. So I won't quote anybody else.
Owned by News Corp, yeah.
But what he does is in 2008, he helped people do so incredibly well. He grew his business from $500 million to $2 billion with no advertising. It was people grabbing people. Now he's $23 billion. So in this book, we show you how to navigate the bear no matter what your age group is.
All right. Well, there is one latter group, though. I still haven't heard about the 50-year-olds, but let's jump ahead to the 70-year-olds because there was a Wall Street Journal piece yesterday about a guy who's 78 who is 98% invested in the stock market right now. There are a lot of people who are either close to retirement or in retirement that are so vested in the stock market that if it crashes for even 2 or 3 years, they're in tough shape.
I agree. Ray Dalio told me, he said, Tony, I don't care what your asset class is that you love. Some people like real estate, some like stocks. You can't put it all in there because one day they're going to drop 50 to 70%. If it's later in life, you got nowhere to go.
So if I'm near retirement or in retirement, how do I deal?
You've got to diversify and get some of that out of the market. But let's be clear. You and I don't know how much income does he need. We don't know what's his health like. We don't know what his goals are. So you can't generalize. But if there was a large generalization that you go and see does it fit you is, as you're getting where you have those fewer years, you don't have a chance to recover. And this market has been going frothy for a long time. So for that
a diversified Vanguard fund?
As long as you're doing the indexes, you're certainly avoiding the fees. That's a very useful thing to say the least.
The book is Unshakeable, and it is now #1 because you've been on FBN so much. Thank you very much.
Right.
Appreciate it. Come back anytime.
Please tell everybody that if you get this book, I'm donating 100% of the profits. I fed 100 million people the last 2 years. This will feed 50 million people because every penny goes.
By the way, where do you put your money?
I'm diversified. I have alternative investments, and I got
you invest it yourself?
Of course I do.
Okay.
And Peter is my advisor.
Tony, thank you very much.
Thank you.
Appreciate it. Great to see you.
I appreciate it.
Melissa.